And hello, everyone. Welcome to another power scanning session. The objective is to find the best setups for the week, or in this case, for the weeks ahead. As the year is winding down, we're almost at the end of this year. I think the markets will be calming down. There are lots of market holidays in the next coming days. So things will be a bit slower. So today, the outlook will be a bit further away. In any case, my name is Daniel Sinnig, and I'm excited to be your moderator today. And today I am greeting you from my hometown in Germany, from Rostock, which is kind of near Berlin, about 200 kilometers north of Berlin, just at the coast of the Baltic Sea. It is already dark, pitch black outside. The weather has not been the best over here. It's almost as every Christmas these years. It's rainy, it is dark, it's windy, so not the best Christmassy spirit, but it's nice to be home. In any case, guys, where are you calling in from today? Please put your location into the chat box. Who do we have today? All right, let's see. So we have David from Delaware. And he says, Merry Christmas. Merry Christmas to you too, David. Who else do we have? Please put your location into the Q&A box of your Zoom window. And I can see we do have a full house, so don't be shy. Don't hold back. Where are you guys calling in from today? Okay, Gerald from Santa Fe. Oh, that's awesome. In the US. Gerd from Germany, close to the Dutch border. I actually was in Amsterdam a couple of days ago, which is also, I guess, kind of close to where you are. Mr. Thompson from Singapore. That's awesome. We went to the Traders Festival in Singapore in November. Singapore was quite impressive. So awesome to have you on board. Must be quite a time difference to Singapore. Walter from Munich. Hey, Walter, wie geht's? Sigrid aus Wien, Vienna. Nice to have you on board. Larry from Maryland. All right, awesome, guys. So thank you so much for sharing your location. Okay, so let's get started. And before we get into it, let me ask you guys another question. Is there anyone here today who's joining us for the very first time? And Keith is saying he's near the Scottish border. Same weather as in Germany, I imagine. Anybody here who's joining us for the very first time? If so, please put a 1 into the Q&A box. So let's see, is there anyone? It doesn't seem to be the case. I did invite a couple of new traders for the session explicitly today, but perhaps they have not joined us yet. Okay, Walter. Okay, there we go. Walter is here for the first time, and Muthu Kumar is also here for the first time. Charts for the first time. Awesome. Well, guys, for you, welcome. It's nice to have you in our trading session today, or scanning session today, and hopefully you will be joining us in future sessions as well. So let's try to make it worth your while. So we are tradingindicators.com. My name is Daniel Sinnig. I'm the guy here on the left-hand side, and of course, greeting you today from Germany. But normally, we greet you from our home base in Montreal in Canada, which has been my home for the last 20 plus years. Oh boy, time flies. And during all these years, Homa, my partner in crime, has been on my side, and Homa and I, we have created tradingindicators.com many years ago, about 10 years ago. And over the years, we've built hundreds, almost thousands of trading indicators for clients all over the world. And a couple of years back, I'd say about 5 years back, also Nicholas here on the right-hand side has joined us, and he has become our lead developer. And together, we are the core of tradingindicators.com. And most of what we do is based on what is called technical analysis, which is basically a pattern analysis, a mathematical analysis of your price chart. We believe that fundamental information is almost immediately priced into your chart. And by analyzing the chart from a technical point of view, you will indirectly also take into account fundamental information. We also believe that trading should be simple, and trading is simple, but you need to use the right tools. And one tool that we use all the time in our trading, especially for trades with a longer time horizon, is Liquidity View. And in today's session, we will use this tool, and in particular the scanner within that tool, to find the most interesting setups for the week ahead. We also believe that teamwork is super important, not just among ourselves here at Trading Indicators, but of course also for our trading community. And this session today is really for you guys. So if you have any questions, don't be shy. Put those questions into the Q&A box. If you have any symbol requests, put them in there. If you want any clarification or if you have any suggestions, please put them into the Q&A box, and I'll be more than happy to go through these as this seminar progresses. And one more thing, somebody's asking, the chat window or the chat widget is closed. These are for announcements, and we're going to use the Q&A box to address questions. Why? Because it's easier this way to keep track of all these questions and to see which questions have already been answered and which questions are still pending. All right, so one last thing. When you trade, keep in mind that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right. Now, before we get into today's market, a quick reminder that when was it? About 2 weeks ago, maybe a bit more, we released a brand new indicator, which has turned around and changed our trading by quite a bit, and almost a 180. Maybe that's too much, but to a big degree. This indicator is called Volume IQ. And if you're curious what this indicator does, you can rewatch the big release of this indicator here directly on our homepage, tradingindicators.com/volume. I think it's a bit hard to see for some reason. My Windows toolbar is hiding the lower end of my slides. But Homer will put this link into the chat box. So tradingindicators.com/volume to check out the recording. And we still have, I believe for the last day today, a super special going on where you can get this indicator at a 50% discount. So if you want to take advantage of this, check it out and act fast. All right, so that's one thing. The second thing is that what we're going to do today is we will interactively scan for interesting setups. And for this, we are going to use, as mentioned before, our Liquidity View dashboard. And I believe that it's probably most beneficial to all of us and to you guys if you follow along, because this is going to be an interactive session. And if you want to follow along, if you want to reproduce the exact same steps that I will be doing today, it is not too late yet, even if you don't have access to our dashboard yet. Why? Because you can quickly, and this is almost immediately, quickly sign up for a 1-week free trial. So if you want to do this, simply go to tradingindicators.com/view. And this link will also be pasted into the chat box. And if you decide to sign up, you will get instant access within like a minute or maybe even less. So you can really follow along. All right. And of course, it's a 1-week try. There's no commitment whatsoever. You can cancel at any time. But if you stay, if you decide to stay on board, we have interesting monthly and yearly options. All of these with no contract whatsoever. All right. So that's that. But what else do we have? We also have, and I need to say this, we also have written an ebook on the topic of the setups that we will be reviewing today. And this ebook is called The Power of 3. Why the Power of 3? Well, because there are 3 main setups that we use over and over again. All of these are high reward and low risk setup. And we put quite a bit of effort into developing and to creating this ebook, because not only because we use these setups in our trading all the time, but we wanted to share with you what these setups are all about and why we believe these work great in trading. And this ebook is completely free. Simply go to tradingindicators.com/power of 3, and this link will also be available in your chat window right now. All right, so think about it. It's completely free. You don't even have to do anything. Just go to this link and download the PDF of this ebook. All right. One more thing, and I keep saying this, but this is almost the last one. We have improved our liquidity view dashboard over the last weeks by quite a lot. And most of these improvements have been driven by your feedback. So here are some examples. We have integrated trade notes into the dashboard. We have implemented new filters, new scans, new indicators even. We now support the German language for some of our German clients by popular demand. New symbols have been added, and so forth and so forth. So guys, please keep sending us your feedback. Don't hold back. So if you have any suggestions based on today's session, please put those suggestions also into the Q&A box, and we're going to see if we can actually implement them for the dashboard. All right. So, and Laura, if you can't use the link, maybe Homaya, please work with Laura if one of the links we sent out is not working. Sometimes it might be due to your virus program, which blocks some of our links because they're all based on redirects. So, sorry, quick detour, and then we're gonna move on. Even this link here, it will redirect to another link where our actual ebook is hosted. And the reason why we use these redirects is because we want to keep our links as short as possible for you, so they're easier to type in, but the actual link is a bit longer. So we use a redirect for that. And sometimes a virus program will pick up on this and flag this as a potential threat. But of course, it's completely safe. So don't be worried about that. All right, guys. Now, let's get into it. And wow, what a week it has been. Boy, exciting Wednesday or Thursday, whenever it happened, to say the least. I think it was on Wednesday when the new rate cuts were announced, which sounds, I guess, or sounded, I guess, positive. But then, of course, in the speech that was given as well at the same announcement, the outlook for 2025 was given, and the outlook did not look too promising as far as the rate cuts were concerned. So there might be a slowdown in 2025, and the stock market reacted a lot to this particular announcement. Not necessarily to the rate cut, which was expected. And as you know, if something happens which was expected, the market tends to not move at all. So that didn't shake the market. It was really the announcement for 2025, which had a huge effect. So let me show you guys what I mean by this. And before we do, just a bit of theory, because it's going to become important. So you may have heard that sometimes a symbol or price within a symbol gaps. And this gap can happen to the upside, but also to the downside. And a gap in trading or a gap on your price chart basically happens when the open price of the current bar is quite far away from the close price of the previous bar. And if this happens, you may see an up gap. So this would be an up gap where the open price of the current bar is above the close of the previous bar, or it could also be a down gap. Both things are possible. Now, in trading, these gaps are interesting, to say the least. Why? Well, because gaps, not always, there's no guarantees in life, also not in trading, of course, but gaps tend to get filled over time. And if you believe in that, and many traders do, then you can trade accordingly. You can position yourself accordingly. Let me give you an example. So here we have a down gap. Let me show you where this happens. So here we are here, let's say in price. We were up here. So the close price of the previous bar was here, and the current bar opened down here. That's a big gap to the downside. Can you see it? Now, what happened shortly after, and it doesn't have to be immediate, sometimes it stretches out. We're going to see this today over a few bars. This gap got filled over time. You can see it here. Price went up again to the price level where we were when this gap happened. So to the price level of the close price of this bar here. This gap was filled. And these gap fills tend to happen quite often. You may now say, okay, well, the stock market tends to go up over time, and it's just quite natural that down gaps will eventually be filled because stock price eventually will pick up again. True, very true. And this happens, I believe, more often to down gaps than to up gaps, especially when it comes to the stock market, to the equities. All right. But it will also happen to up gaps. We had a very interesting example of this last week. So an up gap is almost the same, but just in the opposite direction. Here, the close price of the previous bar was here, and then we opened up all the way up here. Quite a big gap to the upside. So that's an up gap. But also here, in subsequent price action, of course, here took a bit longer. This gap was filled. So at this point here, the price reached the same level as we were before when this gap was created in the first place. We say this gap was filled. So, okay, why do I say this? Well, because such a gap fill, such an up gap fill happened last week. And can you imagine which symbol was it? Perhaps not if you don't follow so closely. So let me go to the dashboard and now show you where exactly this happened. So I'm going to switch over real quick to our Liquidity View dashboard. There we go. And I've already pulled it up here. It's the Russell ETF. So the Russell 2000, the ETF that follows this index. So we have it here on the right-hand side. And let me make this a little bit bigger so you can see it properly. All right. So I'm also going to hide our indicators on the chart so I have a great view. Okay. So you all remember the US election, of course, November 5th, and the Russell gapped up by quite a bit. So wow, made all-time highs at the time. So huge gap up. And then price continued in this direction, then retraced a little bit, and then it even improved on it and made all-time highs again. And at this point, we were really miles away from where this gap was created, all the way down here at 224. Miles away, like 244, 245. But guess what happened? And this happened this week. Price retraced, and then, of course, after the Fed announcement, it really went further down, bearish, 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 and this gap was actually filled. So these gap fills happen, and they happen in both directions. Up gaps are getting filled, but also down gaps. And it's not an exception. This, you may have said, this is just an exception. No, not at all. So let's just see what happened in the past. Okay, so here another example. Big up gap, actually quite a few up gaps in a row. And look where we went afterwards. We filled this gap again. Up gap and filled again. Okay, here down gap, which got filled. This down gap got filled here in a subsequent price action, and so forth and so forth. There's no guarantee, of course. It doesn't always happen. It would be very easy if there was a guarantee, of course, then we could position ourselves with certainty. But in trading, of course, there is no certainty. But if you believe that some gaps are getting filled, and if this gap fill didn't happen yet, well, then at least it's a warning sign that, hey, we may see some corrections later on the market in the attempt to fill these big gaps that happened previously. All right, so that was my big introduction to what happened last week, of course. Okay, so back to our regular view here, and let's stay with the IWM a little bit longer. And let's just see what happened here. Where are we? So, of course, the Russell, and just by looking at the scanner information here, is bullish. We've been bullish for 252 trading days. But recently, and we had this big gap fill, we had a pullback. But it's just a pullback. It's still just a healthy pullback. We can see it here. Bullish pullback level 4, which is our highest level. And of course, this pullback relates to our trend radar indicator down here. So do you see these 5 levels? 1, 2, 3, 4, 5. These indicate 5 different trends. The upper levels are for short-term trends, and the lowest one are for long-term trends. Of course, red indicates bearish, and green indicates bullish. And we can see here that from a long-term perspective, we are bullish, and we've been bullish for a long time on the Russell. But we are now experiencing a deep pullback. There's some traders out there who believe that, hey, when a pullback happens, this is a prime opportunity to now enter into the trade direction of the long-term trend. In this case, the bullish trend. Yeah, and especially if this coincides with price being near, we can see it here, near an important level. So in this case, also price is near this reddish support level, as indicated by our liquidity IQ indicator. The red levels here are support levels, and the greenish ones here are resistance levels. So we are trading near support. We are long-term bullish. And, right now, this is just a healthy pullback within this uptrend. And there are no other signs yet that this overall bullish trend may reverse completely to the bearish side. So it can be an interesting opportunity. And there are many of those right now in the market to enter along into this bullish trend. All right, so this is for the SPY, but let's move on. Spider, SPY. Oh, this was the Russell. Now let's go to the SPY. So SPY, just by looking at these stats here, we can see that, okay, we are currently in the level 3 pullback scenario. We have been bullish as per our MA rush indicator for 404 trading days, and we are trading, we can see this here, above our resistance level. All right, so how can we see this on the chart here? Well, let's start with the last one here. So price broke above resistance 67, this is this number here, 67 trading days ago, exactly at this point here. So price broke above it. We had a couple of retracements, but we've been consistently trading above this level for 67 trading days. All right. But we are now in a level 3 pullback. So you can see here, as per trend radar, actually we used to be level 4 and up until yesterday. But then we, of course, price that was bullish on Friday. We recovered one level. So right now it's a level 3 pullback. The first 3 rows here are reddish and the other ones are green. So level 3 pullback. And once again, this could be an interesting opportunity to re-enter along into this very bullish trend. And because these happen all the time. If you look at the previous price action here, these red patches, yeah, they happen all the time. And every time the market recovered from it. And if you believe that history will repeat itself, once again, there are no guarantees, this could be an interesting opportunity to now enter into this long trade as well. So a level 3 pullback as per trend radar on the SPY and the QQQs. Real quick, the NASDAQ ETF. Where is it? Over here. Also an interesting one. So let's just look at the stats here. Bullish for 399 trading days. Also a level 3 pullback, similar to the SPY. And this makes it super interesting. And I'm definitely going to add this to our watch list later on of interesting setups. We are currently what we call a long break retrace state. One of our setups that we have detailed in our ebook as well. So one of our favorite setups. Why is that? Well, let's see what happened here. So we broke above resistance at this point here, more or less. Price went up and then retraced down, or at least near this broken resistance level, which is now acting as support. And this happens all the time. When support is broken, or sorry, when resistance is broken, it will switch roles and is now acting as support. And if you combine this with some other readings, for example, what is the long-term trend doing? Very bullish. What is trend radar showing us? A healthy pullback within a bullish trend. If these line up, this can be an interesting opportunity to now enter into this bullish trend. And once again, at a much better price. Okay. All right. And one more thing, let's look at Tesla real quick. Of course, Tesla also lost quite a bit of value this week after being super, super extended. But I want to use this example to explain something. Because Tesla went all the way up here to, where was it, 488 or wherever it was, but now retraced all the way down to like 420. It lost like 60 points. That's quite a strong correction. And you may wonder now, why is trend radar only showing a level 1 pullback? How can that be? Well, you can see it here too. No, number 1. Well, the reason is previously price was so overextended with all the averages that we are using to determine what is the short-term trend doing, but also the long-term trend, that even after this correction here, we barely touched the moving average, which denotes our shortest term trend, because we're so far away. Price was so overextended. All right. And of course, as trend traders, this could be a great warning sign if things are so overextended. Perhaps you got super excited or Tesla is going to continue to the upside forever. Getting into this trade at these levels is quite dangerous because these corrections, they will happen for sure at some point. The question is just when, not if. That's one thing. And if they happen, the correction might be quite deep and we may not even be at the end of this correction here. So this might as well become a bit steeper. So, but if it does, if we perhaps go even below 400, this could be an interesting opportunity to once again enter into this bullish trend, but this time at much better price levels. All right. So, and one last thing I have to say, then we're going to get to our scanning session, Bitcoin, BTC. Oh boy. If you are an investor in Bitcoin, so we are holding some Bitcoin tokens, so to say, but from an investment point of view. So we're happy. We're cruising at these levels because obviously we get our Bitcoin exposure much, much earlier. But if you're actually trading Bitcoin, you were in for quite a ride as well last week. Oh boy, how volatile it is. And it looks so tame here on this chart, but these moves are humongous. Look what happened here. We made all-time highs on December 17, all the way to 108,000 or even higher the next day on the 17th. And then a huge correction all the way down. This is 108,000 all the way down to 92,000. We lost $16,000 of Bitcoin value within like 1 or 2 days. And then, of course, we recovered back to 97,000. Boy, these are huge moves. So if you're actually trading this, you really need to have nerves of steel, so to say, and be super careful with your risk management. Or of course, use very small position sizes. Okay. So are there any requests right now which I should address, Homer? Do you see anything? Okay. Do your indicators work on TOS? Yes, Robert, they do. Except for Volume IQ, our brand new one. That one is not available for TOS, but these indicators here, which we have on the chart, MA Rush, which is our trend indicator, this one here. We have this for TOS. We have Liquidity IQ for TOS. It works nicely there too. And also Trend Radar is available for Thinkorswim. All right, perfect. And there are some other questions there, which I'm going to get to in just a bit. All right. Okay, and that's a question. What was the other question? Yeah, so why did our trades from last week not work out as planned? Well, of course, this big move happened here, and this triggered our stop loss. And the way we like to trade our trades is we typically trade them aggressively. I still believe that last week's setups are still valid in the long term. So this is a correction, the way I see it. I do believe the market will recover. And this is, of course, Bitcoin. The market will recover, and if it does, then these symbols that we have picked will also recover. So if you're not stopped out yet, I hope you used wise position sizing. Then I believe, of course, the market will recover. We do not see any signs that this will turn into a bear market. Look at whatever we see here on Trend Radar. These are just patches of corrections, and these happen. Deeper corrections do happen, but the market typically recovers from them. So there's, yeah, at least in the last couple of years, no evidence that this bull market, it's been a bull market for a long time, is coming to an end. And, as long as there are no clear signs that actually this overall bullish trend will come to an end, I would have the same outlook that the positions that we took, which were all bullish positions, are still valid ones. Okay. All right, so now let's go to our slides and let's now discuss the setups that we want to scan for today. So once again, these are high reward setups. We call them high reward and low risk because actually pretty much all of them, except perhaps for the zone break setup, all of them, they require the market to dip first or pull back first. Because why is that important? Remember the example of the of Tesla, where it was super overextended? We do not want to buy Tesla stock, for example, when it's that expensive. We want to wait for the dip. And if you believe the overarching trend will continue, and this, of course, is the right strategy to do, it will not only be less expensive, but you will also have less risk on the table because your stop loss typically is a bit closer by. But of course, whenever we use a tight stop loss, keep in mind that this is an aggressive trade with a tight stop loss, and you may get stopped out. It may require several tries to get it right. All right. So what are we going to do today? Well, first of all, we are going to focus on one setup at a time. We have 4 setups to scan through. So we do it one at a time. If we see something interesting, and I can promise you there will be something interesting, we're going to create a hot list based on these interesting setups. And then at the end, we are going to add some detailed analysis for these symbols in our hot list and add some trade notes to it. So that's the objective. All right. So what are these three setups? So we call them the power of three. And recently, it's called the power of three plus because we have added one additional setup to these three ones. So the three ones are bounce, zone break, and zone break retrace. But there's another one now that we use, which is called the healthy pullback setup. And I always like to start with this one here because it's, to me, it's the most natural one, the most intuitive setup of all of these. So how does it work? Well, the healthy pullback setup happens whenever we are in a strong trend. This could be a strong uptrend or it could be a strong downtrend. So first of all, we need to be trending. So in this case, it's a strong uptrend. So a long-term uptrend. Clearly the stock, here, whatever the stock is, has been going up for a long time. But, in trend trading, timing is super important. You do not want to enter when things are overextended, when price is far away from its moving averages. You see these lines here? These are the means, the averages. So price can be very far away from these averages. You do not want to enter there. You want to wait until price comes down near these lines, near its mean, near its average, and then enter in the direction of the overarching trend. Why is this important? Well, if you do so, you will get a much cheaper entry price and your stop loss can be much closer by. Thus, you have less risk on the table. And we have created an indicator based on this principle. It's called the trend radar indicator. And this indicator can scan or basically show you whenever such a pullback happens. These are these red patches in an overarching bullish trend. So most of the stuff here is green. You can see it here. Most of this heat map is green, but every once in a while, we have these red patches. And these are great opportunities to re-enter into the overarching trend. And the beautiful thing about this is we can actually scan for it using our dashboard. So let's do this right now. So let's go to our dashboard and find these healthy pullbacks. So back to the dashboard. I'm going to clean everything out here. And now we're back at status quo. And we are currently scanning through 4,922 symbols. Of course, you've probably heard it from me before. We will soon be adding 3,000 more symbols to the dashboard and to the scanner. This is in the works and we're putting in the infrastructure right now to make this happen. So this is something for 2025. Okay, so 4,922 symbols right now. So let's find the ones which are currently in a healthy pullback, similar to the one right here, which we have right now. Like the SPY currently, as we discussed previously, has a level 3 pullback. So let's try to find these level 3 pullbacks in the overall market. And all we need to do is to go to this pullback column here. And if you don't see it, go to your column configurator here on the left-hand side and make sure that pullback down here is enabled. If you still cannot see it, it might be because you have too many columns on your scanner and you simply can't see it. If you cannot see it because of this, what you can do, for example, you can drag your chart a bit to the right side to see more columns. That's one thing, one thing to do. You can also just go back to status quo. Oops, there we go. Come on. You can also, oops, you can also simply click here on this hamburger menu on the left-hand side and simply see what the pullback information is. It's also shown here. This is, of course, a bit more tedious. Or what you can also do, if scrolling is enabled, this one here, scroll columns, you can simply use the scroll bar down here to see the columns on the right-hand side. So many different ways to, see everything you want to see on your scanner. Okay, so I'm going to go back to my regular setup and just get rid of the volume information. So now we can see pullback very clearly here. Okay, so we can now see the column. And the next thing I will do is I will scan or filter by a healthy bullish pullback, meaning we are in a long-term uptrend, but recently we pulled back at least 4 levels as per trend radar. or 3 levels. We're starting with pullbacks number 3. So I'm going to go here and select bullish pullback level 3. Once I do this, we can now first of all see that, hey, of our 4,922 symbols, only 376, is less than 10%, are currently in such a pullback state. And if I click on some of these, this one here, Central Garden and Pet, we can see, yes, Trend Radar currently is 3 levels red. Click on another one, Bitcoin, ETF, 3 levels red, and so forth and so forth. So you can see how this works. Okay, that's one thing, but there's more. Because honestly, if a symbol looks a bit like this one here, you can see it's kind of bearish, even though, in the shorter term, it's been going up, but overall, price is still quite below its highest price here at 42. So this is kind of bearish. And Trend Radar even shows you here, hey, this is a bearish stock. To me, these are not so interesting because, you may just say this is just a correction of this bearish move before the bearish downtrend continues. So to me, not the ideal candidate. So let's do one more thing. Let's also filter so that we only see stocks which are at the same time long-term bullish, where MA Rush, this indicator here, so this one here, which shows these labels on the chart, actually shows us a bullish trend instead of a bearish one. So how can we do this? Well, for this, we are going to use our MA Rush column here, and we use the filter next to it and select only bullish stocks. Once I do this, okay, now we're down to 334 stocks. All of these are bullish. Perfect. And one more thing you can do now is you can actually now sort your list of symbols by duration. For how long has the bullish trend continued so far? So this one here, for example, the first one, Central Garden, whatever that stock is, we just recently had a change from bearish to bullish. You can see it here 3 bars ago. You can see this number here. A bit further down, this one, BRW, just recently, 10 bars ago, you can see it here, we changed from bearish to bullish. And what I like to do is I like to focus on the ones which have been bullish for the longest time. So you can sort it in the opposite direction, from highest to lowest. All right. And if I click on the first one here, that's happened to be a German stock, so we're gonna go to that one quite quickly. We can see, okay, this stock here has been bullish for 1,153 trading days, but yet right now we are in a level 3 pullback. For the German clients among you, I believe this can be a very, very interesting opportunity, especially since we are very near this upper line here, to enter long into this particular symbol. So a beautiful long-term uptrend with very few corrections along the way. Price has always recovered in recent history. So now, price retraced. We get this stock now much cheaper, and this could be a great opportunity to enter into this trend. This one here, also a foreign stock. We're not going to focus on this, but kind of a similar scenario. Long-term bullish, but a bit deeper in the corrections along the way. And recently, we gapped down. We have a level 3 pullback. But if you believe that this long-term bullish trend will continue, this could be a great opportunity as well, especially since we had a gap down. Remember when I said in the beginning, gaps tend to be filled or tend to get filled over time? So here we have even one more checkbox in our corner, in our repertoire, that, hey, this could be an interesting bullish opportunity, especially if you believe that this gap will eventually be filled. All right, moving on. Now let's get to the US stocks. O'Reilly Automotive. The next one in the mix. This one is unfortunately very, very expensive. So a stock price of $1,219 currently, but also long-term bullish for many, many years, very bullish, and experienced just recently another pullback to its mean here. And these pullbacks happen even deeper than this one here. But if we believe, at least in recent history, these pullbacks were restricted to just the upper line of our MA Rush indicator. So we had it here, we had it here, and now once again, we went down exactly to this upper line, and there's some early signs that, hey, price may now continue in the bullish direction. So I'm going to add this stock as, one interesting setup, just because it's a US stock and most of our clients are US based, to our watch list today. If you are a German trader, this first one here, Telekom, is also very interesting, of course. I'm going to create my watch list. I'm going to go here to my drop down and click on create and give this watch list a name. And let me just see how I called them previously. Setups 2024. Okay, with the current date. All right. So create setups 2024 December 21st. All right, and that's the first stock I'm going to add to it. Done. Add it to our watch list. We're going to revisit this one later on. Let's just go to one or two more here. Snap on Inc. Yeah, also a nice setup here. The stock is not as clean in the uptrend, so I like the other one a bit better. So I'm going to stay away from this. What I'd like to see is a nice, clean, and smooth uptrend. This one is almost a bit erratic. We had this huge move up, and oftentimes after such a big, sudden move, the correction tends to get even a bit deeper. So here I would stay on the sidelines a little bit. Let's go one more here to Winmark. Oh, too erratic. Gonna rule it out. So this is a stock where, which is really all over the place. We are clearly in a consolidation phase after this huge up move. Price has been retracing and ever since consolidating. If we ever break above this historical high, this could be an interesting opportunity, but I'm also going to stay on the sidelines here. All right, perfect. Sounds good. Let me see if there are any questions. All right.
Okay. David wants to know if you can explain the trends aligned
Yeah, real
column.
quick. So it's this. Thank you, Homa. I saw this one too. It's this column here, trends aligned, and this one also. Because it's a good segue. This also relates to our trend radar indicator, so the indicator down here, and it relates to the fact whenever we have this green dot here. Okay, you can see it here. Now, this green dot that you can see here, it barely happens that we have a green dot, a trends aligned dot, if we are in a pullback state. Typically, these ones happen if everything is green, like all trends are up, all trends are down. So if all trends are up and we have a green dot, it's what we call trends aligned. And the number, let me just clear the scanner here real quick. The number that you can see here, for example, for this one here, Neurospace Inc., is how many green dots in a row we had. So from a technical point of view, what does such a green dot represent? So the trends that we are tracking here, the short-term trends, the medium-term trends, but also the long-term trends, these are internally analyzed via moving averages. Now, if of different periods, if these moving averages are sorted, so that means the fastest MA is above the second fastest one, which is above the medium one, which is above the slow one. If these are sorted that way, then we call this aligned, and all the trends, the short term to the long term trend, they're all aligned. So this number basically signifies this. If this is the case, if they are stacked in that way, we either have bullish alignment or bearish alignment. This basically tells you how long, how strong has the trend been so far. So I hope this clarifies it. Okay. All right, that's great. So now let me quickly go to my slides back here. So this was our first setup, but we have three more to go. And now our power of three setups will be discussed. The first one is the bounce setup, also a high reward and low risk setup. So how does it work? Well, for this, we need to understand the concepts of support and resistance. And here on the chart, we have a support area, a support zone, which is this reddish one here, and a resistance zone up here, which is this green area. Now, if price approaches support from the upside, so it's coming down to support, oftentimes what can happen is that it will bounce off this level and retrace back towards the middle, in between support and resistance. Similar to what we've seen here. The price came down into this level, so what was holding up, and we retraced back into the middle zone here. All right. Now, why do we like this setup? Because if this actually pans out the way it is, there's of course no guarantee, and this is, it's a risk, it's an aggressive setup. You can just put your stop loss just below this support area. You have very little risk on the table, But if it works out, you will win much more than you would have lost. Okay, so it's a high reward, low risk setup in that sense. So how can we find these setups? So one key ingredient is the indicator, which shows us these levels on the chart. And we call this indicator liquidity IQ. So back here, it's this indicator here. Let me just show it to you directly on the chart by hiding the other one. It's this indicator here, which shows you these levels directly on the chart. And in its default version, and with the default parameterization, it actually shows you also what is the price span of my support zone or my resistance zone. So it's also labeled here. So this is shown by default. So what we want to find now are symbols where the current price is similar to what we see here. It's trading near a support level. And we are hoping or anticipating that price will bounce off to the bullish side. So we're looking for these kind of scenarios here. How can we do this? Well, for this, we are going to use our liquidity IQ capture column here, which is based on our liquidity IQ indicator. This one here, which shows these levels. So here I'm going to use the filter one more time. And actually, before I do this, I'm going to clean out all the filters that we had previously. So now I'm going to use this column. Liquidity IQ setup column. My apologies. So this column here. And I will select the long bounce setup, which will find symbols where price is currently trading near a support level and may bounce to the long side. That's where the name comes from, long bounce. So I'm going to click on it. And we can see that, okay, of these setups, wow, 874 stocks are currently trading near a support level. That's quite a lot. Of course, this can be explained by this big pullback in the market that we had last week. So many stocks probably pulled back towards their support level. Okay, so if you look at some examples here, let's say this stock here, we can see, okay, this stock is now, I guess, coming closer to its support level. So you don't have to be directly in here. Proximity is sufficient. So if you're close enough, support level, the indicator will flag this, this scanner will pick up the stock. So let me find another one, perhaps where we are a bit closer. So here, this is a bit better. So here we are almost directly at this support level here. And of course, the idea is that price will bounce off this level as it did previously quite a lot to the upside, towards the middle, in between support and resistance. Okay, that's step number one. But as with most of my setups, I also like to see that this stock is, in addition to all this, also kind of bullish or long-term bullish. So here, if you look at our MA Rush indicator, this one actually just turned bearish here a couple of bars ago. So it's bearish. So this is not the ideal candidate. I want to see this kind of setup when the overall stock is also bullish. So what we can do is we can use, once again, our MA Rush column here and select the bullish filter. All right, once done, we can see, okay, now only 262 stocks qualify for this setup. And as I always like to do, I like to sort from highest to lowest, meaning for stocks that have been bullish the longest and where we now recently see this kind of pullback. Let's start with the first one here, Eli Lilly. So clicking on it, and we can see, all right, we are trading definitely near a support level here. This stock, even though we've been consolidating for the last couple of weeks and months, but this stock is long-term bullish. And it's a classic consolidation pattern now, and we are trading kind of near this support cluster here. And one may think, okay, perhaps, and if you believe, of course, always keep in mind that pharmaceutical companies are always a bit more unpredictable because they're driven heavily by approvals by the FDA and other events. So if a good approval comes out, something good comes up, it may jump up a lot. But if something bad happens, it may go down a lot. So these ones are always a bit more unpredictable. But if you believe that, hey, this trend may continue to the upside, now would be a key moment to enter into the market because we are trading right near the support level here. Okay, so I'm going to add this, to our list of interesting setups. But you know what? You can actually do one more filtering here. Something I like to do in addition to this. Because here, for Lilly, especially if you look at trend radar, you can see trend radar already thinks, hey, this has turned completely bearish. All these levels are bearish. Maybe not the ideal sign. So perhaps let's find some setups where also trend radar shows us a bullish pullback. For example, this one here, number 4, bullish pullback, level 4. The ETF that tracks the insurance business. All right. So what do we see here? Well, we are long-term bullish. It's easy to see for 1,024 trading days. And our pullback right now is still confined to level 4. It's not too deep yet. Not as strong as we had with Eli Lilly. And we are trading right at this support cluster here. And interestingly, even after Wednesday's news or whenever that was, we only retraced down to the support zone. So that it has held up. It was not broken yet. And we've seen some signs, of course, most stocks went up on Friday, that now perhaps we're going to see this uptrend continue. So to me, a very interesting stock here. This nice pullback, it stopped directly at support. It's just a level 4 pullback. We are trading at support. I'm going to add this one to our watch list as well. All right, perfect. And perhaps one more in the similar spirit, energy. So energy, oh, this one has been, oh boy, now, this is a great chart to look at from a technical point of view. Look how beautifully these levels are held up in the past. So this stock here went up directly almost to the T to this resistance level and then bounced up from it. And now we're trading once again at this key support cluster. And potentially we're going to see another bounce here. But this is a bit of a too sharp of a drop for me. So I'm going to skip this one. Let's try to filter here using our pullback column by stocks, which are currently in, let's see, at level 4 pullback at the same time. So with the insurance here, the next candidate perhaps is this one, CSWI. Nice stock, nice uptrend, a couple of corrections along the way. And now another correction and right to this support level. It has held so far. And this could be, once again, an interesting stock to enter now into this long-term uptrend. So it's been bullish for 597 trading days. So I'm also going to add this one to our list. And there are so many more. If you have access to the dashboard, of course, you can do all these scans yourself. And I'm telling you, find even more interesting setups. But of course, then you have to just go through these ones, these 35 candidates. We don't have enough time in this webinar because there's 2 more setups, which I would like to go through. But this is an easy exercise if you have a bit more time on your hand. All right. So let me see if there are any questions. I don't see any right now. So let me continue with my slides. Okay, so this was
Daniel, we do have a question about a watch list and to view a symbol. Did you want to get to that later?
this one. Oh, I didn't even see it. Yeah, the
So
watch list
Robert
one.
wants to know how he can use his own watch list.
Yeah. Okay, perfect. Robert, I will also send you afterwards, or please send me an email afterwards with a notification. And then I will send you the recording of the bootcamp for this dashboard, because it will show you in a very detailed manner how you can add your own symbols into a watch list. But in essence, it works like this. You go to this drop down here, you click on create. Actually, you don't. You click on import, this one here. This will then ask you for a CSV file, a comma separated file, and the symbol names or the should be in the first column of the spreadsheet file. Watch the bootcamp to see how this file needs to look like. And once you click on import or open here, this will create a new watch list. And then you can select this watch list here in your drop down as any of these with your symbols in there. Of course, a precondition must be that our scanner tracks that symbol. So right now we're tracking around 5,000. If you're trading something that's not in our scanner yet, then it will not be shown, of course, because we need to get all the price data. But if you don't track it, then it cannot be analyzed.
And if you just have a small set, you can just add them to your watch.
Yeah,
You create the
also,
watch list here directly and add them.
that's right. So you can just, that's true as well. So you can create a new watch list here. So let's say Mark's watch list. Create it here, create, and then you can simple right click on any symbol that you're interested in and just say add to and go and then pick the watch list to which you would like to add this symbol. like this. And once created, you will see that watch list now in your user-defined watch list here, or these symbols. For example, this one here marks watch list. These two symbols which I just added are now shown in here. Cool. All right. Perfect. So thanks for the question. Very good. Now let's move on.
And
Next
Gert
set.
has a question, if you can see MLI.
Yeah, we're going to do this at the end when we
Okay.
have the symbol roundtable. All right. So next setup in our list is the zone break setup. Now we discussed that, hopefully support will hold up, or hopefully resistance will hold up. This is the basis for our bounce setup. But unfortunately in life, there are no certainties. And eventually, support may be broken, or resistance may be broken to the upside, support broken to the downside. But if this happens, this also presents another opportunity to us, because if such a break happen, oftentimes price will continue. You can see it here in the direction of the break for quite some time. This can happen when support is broken or when resistance is broken. So let's try to scan for these setups now. Back to the dashboard. All right. So I'm going to go back to our status quo for 4,922 stocks being tracked. All right. And once again, I will use our liquidity IQ indicator to find us these zone breaks. So let me just quickly show you how these look like on the chart. So for this, I'm going to enable our zone break labels here. I just disable these by default because they clutter my chart a bit too much. But if these are enabled, and this is a bit hard to see here, this is exactly why I have disabled them. You can see these labels pointed out here whenever a zone break happens. This is maybe not the best example. Let me find another one. This one back, for example, here. A bit hard to spot because there's some other conditions which we also require. Actually, one second, let me just go to a more popular symbol. Oh, now I remember what that happened. Also, I would like to enable one more thing, the zone break symbol on the chart. There we go. Okay, so once this recalculates, we will see. Nope, I'm proving up myself wrong here. Yeah, these little arrows on the chart. These are breaks of, in this case, support when they happen to the downside, or they also may happen to the upside. Just find a good one here. For example, here. All right, so these are breaks to the upside. And when these happen, this is like, of course, the ideal scenario, price may continue in the direction of the break for quite some time. And if you wonder, hey, why, for example, this here was not a zone break? Technically it is, but to our indicator, we only signal zone breaks if there are no other levels above price. Basically, if it's a resistance zone break to the upside. Basically, if we have clear skies ahead, nothing will hold our move back. So we had this back here. At this time here, when this happened, there was no other level above. This is why we have these zone break labels here. So this is another precondition for these zone breaks to be indicated by our liquidity IQ indicator. So now how can we scan for these ones? Okay, let's once again use our liquidity IQ setup column here. And in this case, we are going to choose long break. And once done, we can now see all the stocks which have currently broken the highest resistance level to the upside. In this case, 307 stocks out of our 4,922. All right, so let's check out a few of them. So for example, this one here, Applied Opto Elect. And we can see here, yes, this stock is trading above its resistance level. So nearest resistance is down here. We broke above it. At this point here, we have the zone break indication. And if we look at our scanner here, we can also see that, hey, this zone break happened 29 trading days ago. And if you were to count up these bars, these candles from first to the one where the zone break happened, you will count exactly 29 bars. This is where this number here comes from. All right. So, and the next thing you can do is you can sort by the duration. So from highest to lowest, or the opposite. And if you were to sort from highest to lowest, you can see here, or this one here, for example, ISRG has broken above its resistance level a long, long time ago. all the way down here. You can barely see it. This break happened. Ever since we are trading above this resistance level. This German stock, which we had previously, here the break happened at this point, 126 trading days ago. On when was it? Around July 1st. And ever since, trading above this level. And this is exactly the kind of move we're hoping to see afterwards. Of course, these are the ideal cases. This move, of course, has passed now, but this is what we're hoping for when it comes to such a zone break trade. But how can we now find the zone breaks which happened recently? Okay, easy. We can simply sort, instead of sorting from highest to lowest, we will sort from lowest to highest, where the zone break just happened recently. So, for example, this one here, Banco Latinoamericano. Here, the zone break, somebody can see it here, just happened at the very last symbol. Since then, we're trading above resistance. We attempted it before, we retraced a bit, and now once again, we're trying to break above this level once again. Could be definitely an interesting stock to trade. Or this one here. Just one more example. Here also we have the zone break at the very last bar, the symbol. But let's do one more thing. Once again, I like to see stocks or find stocks where the uptrend lasted for the longest. So we could, of course, once again, filter by the bullish uptrend here and then sort by how long this uptrend lasts. But then we lose our long break indication where the break happened at the last bar. That's number one here. So what else could we do? Well, for Liquidity IQ, for this column here, we can actually add a second filter to it. We're not only filtering for long break stocks, but also where the break happened at the current bar. So both need to be true for it to be picked up. So once all this is done, we can now see that only 14 stocks have qualified for this kind of filtering. So the first candidate is this one here, Darden Restaurants, DRI. So what happened here? Interesting one. So here, we were kind of range bound. And I believe perhaps, earnings came out or something happened. Price then jumped up, a huge gap up above its resistance level. And ever since we're trading above resistance. All right. Of course, here you want to be careful, but first of all, we had this huge gap up, and we just talked about gaps. Gaps tend to be filled over time, so perhaps be careful. Also, after such a zone break happened, it is not uncommon that price will first retrace back to the broken resistance level, which is now acting as support before this move really takes off. But definitely an interesting stock. Let me just quickly look what happened here in the past. Yeah, we definitely were consolidating for quite a bit. Oh boy, we really have been range bound here at these levels. If you look at this one from more than a year, very range bound, but finally now we broke off. And perhaps this could be the indication of another move or leg up in this uptrend. So definitely interesting. So I'm going to add this one to our list. And let's look at the next one here, White Mountains Insurance Company. Yeah, also here, we have the zone break. It's actually also a nice one, by the way. Why? Because we attempted this zone break a few times before. So here price went up, for example, then retraced back to this broken zone, which is now acting as support. When resistance is broken, it becomes support, and now we're trading just at this level here. Definitely an interesting candidate as well to go long, especially since we are long-term bullish. So I'm going to add this one as well to our list. All right, perfect. All right, so these are these two ones, and of course, if you have the dashboard, you can simply go through these other candidates as well. But we have one more setup. This is why I'm rushing a little bit through this one here, because this next one is my favorite setup. It's called the long break or the zone break retrace setup. This one down here. And this one is also detailed in our ebook. Okay, and the link to the ebook is in the chat. How does this setup work? Well, it's as follows. We, as the name suggests, we require a zone break first. That's our precondition. So price needs to break either above resistance, as we see it here, or below support. That's a precondition. But oftentimes what happens, after this break, price will initially go up, but then it will correct, it will retrace. Market kind of tries to fake you out, or scare you away, to retrace back to the broken level. And when resistance is broken, it will act as support. And when this happens, this can be a great opportunity to re-enter into this bullish trend in this case, because we already passed this first fake out. Hopefully, it's the last one before price really continues in the direction of the original break. All right, so how can we scan for this setup? So back to our scanner here. I'm going to clean up everything once again, and we are going to use once again our. So I quickly hide these zone break labels. I think they make the chart a bit too messy. There we go. All right. So this is done. Perfect. And now we're going to use this column here, the Liquidity IQ setup column, and we will filter by long break retrace, this one here. So it's a very selective setup because we first of all need to have the break above the highest level of resistance, and then we need to have a pullback back to that broken level. This doesn't come around too often. Okay, so in this case, only 54 symbols have qualified for this particular setup. Wow, that's not a lot. That's like 1% of all the stocks that we track. And if in addition to this, we also consider the ones which have been bullish the longest, we can even narrow this down further. But let me actually start with these ones up here. Do you see these stocks here where we actually don't have any reading for ME Rush? ME Rush is our long-term trend indicator. So here it seems like, hey, this stock is neither bullish nor bearish. And I'm going to focus on this one here because Costco, everybody knows. So Costco, what happened here? And we are actually fixing this. It's a bit of an anomaly with our ME Rush indicator. What happened with Costco is that ever since we tracked Costco, and we started tracking these things for since 2017, I believe. Ever since we tracked this stock, that 2017, has only been in one trend direction, which is up. And of course, it should say bullish trend here, but the way our internal indicator here works, MA Rush, it requires a change from bearish to bullish. So we had bearish here, and then it switches to bullish to have a reading for this number. We're going to fix this in a future version, but in Costco, we only had bullish. There was no bearish before. That's why you have this little dash here, but don't disqualify the setup because of this. Because in fact, this particular one, Costco, is super interesting. So we recently had the zone break. Let me make this a bit bigger here. Above resistance, you can see it here. Price initially went up, and now it retraced down to this broken resistance level. And we see initial signs, of course, everything went up on Friday, that potentially the bullish trend may continue in the upside direction. So this setup reminds me kind of similar to what we saw on the slides. Yeah, up, then shortly after the retrace, and then it really took off. So I really like this. The way this looks on the chart, we are also in a level 3 healthy pullback as per trend radar. So I'm definitely going to add Costco to my list of interesting symbols. All right, done. Okay, so that's that one. But now let's look at the one here, which have been bullish for a long time. GATX. Okay. Yeah, interesting one too. Let me just quickly look at this one here. It's a bit erratic. We had this long consolidation here after this all-time high. And now we jumped up, but we had this big gap. Here I would be a bit careful because, this gap might still be filled. And you may say this is miles away. Well, we've just seen this on the EWM. We also had this big gap after the election, and price still went down all the way down here. So I'm going to stay on the sidelines for this one. Build a bear workshop. I remember this one we had previously before. Kind of similar story. Big up gap, then retracement back to the broken level. Now we're up again, still near the level, but we still have this big gap here. So price may still come down to this one. So I'm going to skip this one as well. MPLX. Let's look at this one here. Ooh, this one is interesting. We actually moved up quite ways after this zone break here. Now we're all the way back here. And here, if you believe that this gap may be filled, maybe put your stop a bit closer here, which is not too far away from your price right now. And anticipate that, hey, this uptrend, which has been in place for 1,006 trading days on MPLX, will continue. So this one, to me, is definitely an interesting candidate, especially since we also now have a level, a pullback here. And yeah, I'm definitely going to add this one to our list. All right. So I hope you get the idea of how we can scan for these setups. Okay, so let me see if there are any questions. I've been talking a lot. Let me see. Homa, are there any questions about this? What is the
Are you looking at symbols yet, or still questions?
still questions for now. Symbols we can do just at the end. So I would
Okay.
like to qualify our setups real quick or go through them, ones that we found so far.
Okay, sounds good. So Gerald, it's actually related to liquidity IQ, this question. He wants to know the difference between a liquidity capture zone and resistance support.
Yeah. Okay, that's actually a relation to it. So liquidity capture, Gerald, are these shaded areas here. They will always only happen when price is near either a resistance level or a support level. And these are always specific to a particular bar. So it's a bit hard to see, but if you put your labels on, at least the last one will be labeled. So this one here, for example, we had this liquidity capture at this bar here. So you can see this little label go down. Price is near this resistance level. That's a precondition, but that's not the only precondition because there's a second one and a couple of other ones which are our secret sauce. But another precondition is that this bar needs to be a bar with abnormally high volume. That's what we call liquidity capture. Somebody is, in this case, selling up the buy the buy orders at this level, which drives price further down. So to us, it's often a stronger sign that, hey, this level is holding up and price will retrace back to the downside towards the middle in between support and resistance. So that's the relationship between the two. And Robert, for your question, he's asking, can we only focus on optionable instruments? Yes, there's actually such a thing. So Robert, if you go to our column configurator here, you can enable a column called optionable, this one here. And there's a filter attached to it. You can then just say, hey, show me only the ones which actually have an options chain. And this is not enough. And where the options chain is reasonably liquid as well. So you can then sort for all these ones. And if you do this, for example, only 16 of our 5,000, almost 5,000 symbols survived our long break retrace filter and this optional filter. So that's possible already. All right. So now let's review what we have found so far. Okay, so I'm gonna go to our watch list here, our setups. I'm gonna clear out the filters. All right, so we have found 8 interesting setups. Let me just sort them a little bit by liquidity IQ here so we can go through these one by one. And the first one that we had, or one of the first ones, was Lily. Currently in a long bounce scenario, we are trading near support and we have a full pullback here. So to me, not the prettiest one for 2 reasons. This seems to me, hey, we're going to enter a longer consolidation phase. And even if we bounce up, it might be short-lived. So I'm going to stay on the sidelines for this one. Also, it's a pharmaceutical company, so you never know what's happening there. So let's skip this one. I think we have other more higher quality setups. CSWI. Yeah, this one I like a lot. So here we had, what do we have? We had a gap here, but this one is already filled. Great. We are trading near support and we have a level 4 pullback as per trend radar. Definitely an interesting stock for a long entry. So this one, I'm going to put a trade note here by clicking on this trade notes icon here. And you can also type your notes here, but we don't have time today. Let me just add the chart to this trade note. It's going to keep track of it. And later on, perhaps in a couple of weeks or in the new year, we can come back to this chart to see if this trade idea, obviously it's a long trade, has panned out or not. Okay, so this is an interesting one. Next, this is a good one too. iShares Insurance, also in a long bounce scenario. So we bounce off here. We are long-term bullish, but 1,024 trading days, level 4 healthy pullback. So I'm also going to add this chart to our trade ideas for the week ahead. So it's a very smooth uptrend. Just now trending at the lower end of this trend channel here. Yeah. So it's a trend trader. You always want to enter around the lower end of the trend channel at the upper one. I'm going to add this one as well to our, I'm going to add this trade note here as well. And the beautiful thing about the trade notes is that every annotation that you may have had on your chart, like these trend channels here, they will also be added to your trade notes. All right. Okay, MPLX in a long break retrace state. We just had this a couple of minutes ago. Yeah. I think we had the gap. Didn't we have the gap here? Let me quickly see. No gap. Yeah. Also an interesting stock. I'm also going to add this one as an interesting idea here. I believe that this uptrend is about to continue to the upside. All right, that sounds good as well. So I'm going to add the same thing here to our trade notes. Costco is next. That's going to be an interesting one as well. So here for Costco. Oh, actually, let's look at the symbol first. Yeah, definitely an interesting one. We did have a bit of a gap here. You can see we gapped up all to this level here. It's not a big gap. Here, I potentially would wait until we perhaps go down even a bit further, maybe to this level here. If we see price retracing down here, I would definitely consider Costco for a long trade. In the anticipation that this uptrend will continue. Of course, Costco, as long as we've been tracking it, has always been bullish. It never looked back. So this could definitely be an interesting opportunity to enter into this long trade. So I'm going to add this as well to our trade notes. Okay. Oh, there we go. By the way, if you don't know it yet, you can also dictate your trade notes. And recently, we've added the feature to dictate your trade notes in German and in the German language as well. And all you need to do for this is to first change the language of the dashboard via this icon here from English to German. All right. O'Reilly Automotive. Also a good one. I'm just a bit worried about this big gap here. So gaps tend to get filled. So here I would definitely wait until price comes down, perhaps to this level. Then I may consider it because this is a very expensive stock. Just as Costco here, perhaps wait a bit longer until price, fills this gap that we've seen previously in this level here. So here we're going to stay on the sidelines. We're still too far away from this level. Darden Restaurants. Yeah. Also, it's a long break stock. But here I'm just worried about this big gap. So if this gap gets filled, price will retrace all the way down here. I would be careful with this one. So here we're going to stay on the sidelines. And White Mountains Insurance Group. Let's see what's happening here. Also super expensive, this stock. Yeah. I think a bit too erratic. Look at this price action here. Of course, we just consolidated after this big up move, but to me, it's a bit too erratic to make any decision here, especially since this stock is so expensive. Yeah, all right, that sounds good. Perfect, guys. So these are my top picks for today, for the week ahead and the weeks ahead. And now let's see if there are any questions. Alrighty. Dennis wants to know, would it be important to add bearish trades instead of bullish ones? Yeah, I'm just, we can only do so much scanning here in our session. Of course, if you believe that a stock is in a clear downtrend and you think this downtrend will continue, for example, then yes, a bearish setup could be just as valuable. I just believe that stocks go up in general over time. So bearish trades, of course, are always a bit more risky, and many traders don't have margin accounts to execute bearish trades. So I'm just focusing on the greatest common denominator here. But yes, bearish trades they follow the exact same patterns that we've seen here, just to the opposite direction. So short bounce, short break, and short break retrace, for example, could be some examples of bearish trades. All right, Homer, are there any other questions? There's a long one there, but I think
no, actually, that's also a symbol request. So
oh, okay, perfect.
yeah.
So let's go through the symbol requests now. So the first one was
MLI.
MLI. Okay, so I'm gonna go back to my scanner here and let's have a look at MLI. Oops. There we go. Mueller Industries. Yes, I believe we had this trade at some point. We pointed this one out. Let me quickly see what we set. So here on November 30th, we said enter at current levels, and back then I had the patience to actually type in my trade notes during the webinar. So enter at current levels, which were at around 80. You can see it here. This is the screenshot from back in the day. Stop around 71, target around 96, and price is now around 80. Okay. So actually, it's pretty much the same price as we had before. So the question, I guess, is this still a valid setup? So what do we see here? All right. So, yeah, so this is what we call a magnet zone setup, where price is in the middle between support and resistance. You can see it here. But I believe overall, especially since this stock has been bullish for so long, it's still very valid to stay within it. We have our support level here, which is our stop loss at around the 70 levels as we had it previously. And actually, we also had, if I look a bit closer here, we broke above resistance here. So this resistance line or this broken level may also act as support now because resistance will become support when broken. I believe this is where we placed our stop loss initially. But we're trading now around 80. And yeah, I believe this is still a valid long setup. So definitely this trend is still a valid long trend. It hasn't been broken. Trend radar is showing a level for pullback, but overall it is still bullish. All right, any other symbols?
Yes, let's do RGTI for Kevin.
All right, RGTI. Do we have it? We don't have that stock. Yeah, this is a stock which we probably gonna be adding when we will add our new batch of symbols to the dashboard. So
And guys, if you want any other stocks, any symbols added, just send us an email.
All right. What else do we have? I see
SOFI, Sophie.
Sophie. All right. Okay, so what do we have here? Yeah, we had our zone break back here after the election, I guess. And that ever since we retraced quite far up. Trend radar is showing a level 3 pullback after the pullback this week. Yeah, we're definitely closer to the means now, to the mean here. We were really far away. Now we are closer. I mean, I still find it's a bit risky, especially since we had this big move up. The stock basically doubled since September in value. This correction, any FIB technician will tell you, hey, this I don't know when this move started. Let's say it started from here. We'll tell you this correction is it's very shallow so far. So we are only right now at the 23.6% FIB correction. FIB levels often retrace all the way down here to the 61.8. We never know, of course, but if this would be any FIB related correction, we may actually see a deeper one here. So I would stay on the sidelines for this one at the minimum to see whether we can get close to our moving averages here. All right. What else do we have?
We would like to see SDIG.
Say it again, Homer, please.
SDIG.
SBI.
A D.
Oh, D. Okay.
Yeah.
D like Daniel. Okay. Transdim Group. Yes. Let's see what we have here. So just looking at our scanner here, we can see we are bullish for 495 trading days. And it looks like we're correcting right now. Yeah, so we made this all-time high here. The price is definitely in some sort of sideways action here. Oftentimes you can see it when trend radar, even though it's more green than red, but if you just look at this patch here, there's a lot of red in this green stuff here. This is typically a sign for sideways action. It's correcting. If you believe that this correction may be over soon, and we are trading near the support cluster here, yeah, why not potentially take a low risk trade here with your stop loss perhaps at around 1,150 or something like this, in the expectation that price will at the minimum go to the upper end of the sideways range, perhaps near this resistance level here at 1,450, near the all-time high, or perhaps this one here at 1,369. Okay.
Patrick would like to see AI.
All right. AI. Okay. There we go. By the way, there's a little trick here I just did. So let me just show it to you again. So sometimes if you type in, let's say something like AI, because the search works on both the symbol name and so the actual symbol and the name of the underlying, you get a lot of hits. Like in this case, 158, because here we have this AI in the word as well. See, in Wayfair, AI is there too, so it's picked up as well by the search. So what I did, just to find it quickly, I then sorted by symbol name here, and then of course it starts with an A. It was very was to find. I was able to find very easily, just here by sorting my symbols from, yeah, A to Z. So AI. Okay. So what do we have here? Wow, this one really went up quite strongly since even before the election. Rush turned from bearish to bullish on November 1st, and ever since we attempted to break this resistance level here, which was formed, I guess, from the swing high here. We achieved it. And yeah, now we're trading near this broken resistance level down here. There are like many levels on play currently because this stock has been a bit, I guess, in this range in recent history or somewhat recent history. Yeah, potentially an interesting idea to go along. At the minimum, I would wait until price is above this resistance level if you're considering going long. If yes, then we may see another move up towards this level here initially, around the 50 or 49 level. You may see some resistance here, and then price eventually might break above. All right.
Okay, let's take a look at TSM for CAM.
TSM. Okay. Oh, Taiwan Semiconductor. Yes, I am. A classic. It's kind of in a zone break retrace state. So here we broke above resistance. We retraced to that level. It kind of held up. Retraced once again here. It held up, and now we're above it. And yeah, we may see. Let me just have a quick look here. Yeah, we may see another push higher after. If this level holds up, of course, the next stop would be here at 213, around that level, at the all-time high from October 17. And yeah, it looks like we're consolidating a bit after this all-time high. It's normal. So markets will consolidate. But yeah, I definitely would see the stock as very bullish. And if you can hold this level, yeah, this all-time high will definitely be attacked by this stock.
Let's take a look at BA for Dennis.
Okay. BA, similar scenario, lots of hits with BA because it's also a short word. Okay, let me just scroll down a little bit to find BA. Boeing. Oh boy, Boeing has recovered a bit, huh? Since its very bearish phase that we had since, when was that? Even before this, let me just quickly see when this bearish phase start. I guess around here, this area. After this almost all-time high, we lost, or BA lost half its value, even a bit more, or around half its value. But then we kind of found support, and then the price is pushing up again. And yeah, I think it is not unlikely that price will continue at the minimum to this resistance cluster here around the 200 level, or a bit like 195. And if you are long Boeing right now, I would definitely look out for this level here to potentially book some profits. And I see Boeing perhaps range bounding a bit between the support level here, it's right now in the middle, and this resistance level. All right. Okay, maybe one or two
Would
more
like to
symbols.
see, yeah, we have a request here from Ethel for NBIS, Daniel.
NBIS. We don't have it, unfortunately. So after also this one will be added when we add all these extra symbols. And one more, you can see it from Mosh. SDIG. Okay. Oh, we just had this one, right? Yeah, this was the range bound one. Which didn't we? I
Yeah,
believe
but he
so.
made
Yeah.
a comment here that it's not showing up properly. I'm not quite sure. It should be Stronghold Digital. So maybe let's take a look at that. Oh, it says TDG.
Okay. But maybe Mosh, we can take this one offline as well. Yeah, we just had oh, it's coming up as SDIG. Oh, yeah, Mosh, that's because now I understand the question. Once again, the search here picks up the symbol. You may think this is the symbol it found, but it's actually TDG. And the reason is because SDIG, if you look carefully here, is part of this name. That's why it was found. Okay. So, let's do Walmart real quick, and then maybe Walmart for sure we should have. Walmart. Do I have oh, there we go. Walmart store WMT. How because of the dash here? Yeah, very bullish. We had a bit of a pullback here for Walmart, and we can see that we pulled back a little bit towards our means here. I mean, this is definitely better than we were up here at 95. Now we lost a bit of value. I still would like to see this pullback a bit deeper. This is a level 3 pullback now, as per trend radar. But yeah, if you want to buy the dip, this would now be the moment, I guess. So finally, we saw a bit of a pullback in Walmart. It has been so green and only shallow pullbacks. And yeah, definitely a super bullish stock. So yeah, interesting one for sure for a long trade, especially after the recent pullback.
Let's take one last one from Kevin, and that's quantum computing stock, and it's QUBT.
Yeah, this one here. Okay, so here we can, oh boy. Yeah, here we have not much price action to go off from. So this one went parabolic. There are no close by level. So that's a bit hard to analyze, Kevin, from our indicators point of view, because it's just the price action is too what happened with the stock is not recent enough. So this just went up. There are no relevant levels except for the ones down here. So that's a bit yeah, here we, I guess, would perhaps use our indicators on lower time frames. So Kevin, if you have our indicators on lower time frames on TradingView, for example, then you would definitely see more interesting levels. All right, guys, thank you so much. That was a long session, Holmes. Lots of good comments and symbol requests. So thank you so much for this. And let me just quickly go back to my slides to summarize. So first off, if you don't have our ebook yet, you can download it completely for free by going to this link here, tradingindicators.com/power of 3. That's one thing. And the link is in the chat. Number 2, if you want to try out our dashboard, you can try it out for 1 week completely free, no strings attached, by going to tradingindicators.com/view. It's a bit cut off here, but that's the link. It's also in the chat. And lastly, if you have not watched the recording of the indicator that has changed everything for us in our trading, check it out. I believe you will find it interesting. It's at tradingindicators.com/volume. The indicator is called Volume IQ. It works right now on TradingView. We plan to have it on other platforms as well. Check it out. It's our most sophisticated indicator to date. Actually, perhaps the one that took the longest to develop. All the other indicators, of course, also have quite a complexity to it. But Volume IQ finally takes into account volume data for your trading, because that's, I believe, a true reading of what is going on right now on the market, because the current volume is being analyzed. So check it out here. And of course, this indicator, I believe only for today, is available at a 50% discount. So if you want to take advantage of this, here is the link. All right. Now, with that, if there are no more questions, I do see a couple of questions here, but if you missed the question, first off, I should say it. You can also just reach out to us via our homepage, tradingindicators.com. Go to the main menu. There is a contact item there. Click on it. It will open up a contact form. Put your question there, and it will go straight to my or Homer's inbox, and we will make sure to get back to all your questions as soon as we can. And before I forget, of course, guys, I wish you all happy holidays. Take some time off. I'm looking forward to this. Spend some time with your loved ones, perhaps take a nice vacation, and then see you all very soon at a future webinar of ours. And yes, by the way, our next scanning session, we haven't finalized the date exactly yet, but it will not be next Saturday. We might have it on next Sunday. That's because of a constraint that I have on my end. We may have it on next Sunday. If not, it's going to be the week after, but please look out for an announcement from our side for that. All right. Okay, so let me just see a few more
couple of
questions.
last minute questions coming in. Daniel, if we have Gerald wants to know if Volume IQ, if there are plans to put it on the dashboard.
We will definitely look into it. I can see this at least, but it would take a while. So we're still kind of adding new features to it. So we have a focus group for our TradingView users, the ones that came on the first time, to get some feedback, to improve the indicator, add new features to it. So that we want to do first. Then we want to port it to NinjaTrader and for Wave to other of our other platforms that we support a lot. And once this is done, we will look into how we can integrate Volume IQ into our dashboard as well.
And Moshe, Gerd, Olaf, and Larry, thank you for happy holidays comments in the Q&A box. Happy holidays to all of you as well.
Perfect. Awesome. And I just looked at Kevin's, happy holidays from me as well. And yeah, and this is something, Kevin, we may add in future versions. So we always try to take into account feedback. And if this is something that we can do on our end, we definitely got to look into that for sure. Perfect. All right, guys. So thank you so much, Homer, for going through all these questions. There were so many today. That's great. It was really interactive, the way I enjoy it the most. Thank you so much, guys, for this. And with that, Merry Christmas, Happy Holidays, and hopefully talk to you soon. And stay safe, guys. Bye-bye.